Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
And so one of the things that we talk about for anybody who's charitably or philanthropically inclined is what are called qualified charitable distributions. Why don't you talk a little bit about those for a second?
Yeah, absolutely, James. So qualified charitable distributions, the acronym QCD, what that is, it's a fantastic tool to utilize, again, depending on your overall financial plan and all the moving parts, which we help our clients analyze. But if it makes sense, the requirements are this. If you're 70 and a half, you can use a qualified charitable distribution, which is basically when you have your RMD, let's say that it's, I'm going to make up a number, $150,000 for the current year. You can, and let's say that your cash flow needs are met, you're getting funding from other sources. You don't need to utilize that RMD to meet your living expenses, but you're also charitably inclined. And you have a specific charity that you like to donate to. The IRS allows you to utilize your RMD up to $108,000 for that year to go towards going direct, basically make a distribution directly to the charity from your IRA account. So the charity gets a charitable contribution, which you're doing good, you're helping a cause that you believe in, and you're also with your own financial plan, strengthening your plan, because by doing that, it reduces taxable income for you for that year. There's no tax deduction, but it's very, very helpful because it reduces your overall taxable income instead of counting towards and being taxed at your ordinary income tax rate. So it's a pretty powerful tool.
Fantastic. One of the things I wanted to emphasize that could be very confusing is you mentioned the age of 70 and a half. And so here's where tax law hasn't necessarily all been updated simultaneously and kind of the hodgepodge of things. But the age 70 and a half comes back to what RMD age historically was, right? I mentioned early on in the podcast that RMDs used to start at the age of 70 and a half.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.